5 reasons for the crypto collapse. You are asleep and had a dream that the stock market is crashing down and the value of crypto that you had invested in is going down rapidly. You wake up and realize that it was just a dream. But we hate to break it to you that the worst nightmare for a new investor in crypto has become the reality today. Hello everyone and welcome to our YouTube channel today. We're going to talk about how top virtual tokens saw another price decline, continuing the downward trend that has plagued the cryptocurrency market. A digital currency known as cryptocurrency functions without the support of a bank or the federal government to maintain its value. Cryptocurrency like Bitcoin has a value that is unrelated to any external assets, making it more unpredictable. The world where cryptocurrencies are making tremendous success in the market and is continually challenging and changing the conventional methods of payments all across the globe, it is disheartening to know that recently in the month of June 2022, crypto crashed and lost almost half of its value in the second quarter of 2022. Experts have claimed that Bitcoin has hit its lowest and it has been the worst quarter for the currency since 2011. In the quarter of 2022, the value of the biggest cryptocurrency in the world decreased by almost 58%. The entire market for cryptocurrencies has lost close to $1.2 trillion. And as a result of this downfall, many crypto firms have announced layoffs, leaving thousands of people unemployed. According to experts, this is due to the relative global climate. Not just in the cryptocurrency sector do things appear bad, but the living expenses are growing, interest rates are rising, a recession is approaching, and inflation is skyrocketing. If you need advice on how to evade such situations where you absolutely have no idea as to what is happening with your investment and what could be the possible reasons behind such downfalls of crypto, then we would suggest you to watch this video till the end. Now, it's time to list out the actual reasons why the cryptocurrency is crashing or crashed. Number 1, sell-up of the Bitcoins. 2 considerably less well-known but still valuable coins collapsed last month, which significantly dented market confidence. People are therefore making the decision to sell up the currency more frequently. Because Bitcoin's value is linked to its demand, the more people sell it, the less it is worth. Since they could see the value declining, more people decide to sell as a result, and the cycle continues. Bitcoin, unlike other more conventional assets, lacks an intrinsic worth to support it. There are no physical assets, revenue streams, or underlying businesses. It seems the cost is solely and completely determined by how much people are willing to pay you for it. The situation becomes frightening at the point because there is no floor if enough people try to leave. Nothing will prevent it from trading at as low as $10,000 the following day if enough people decide to give up or are compelled to sell. Number 2, Three Arrows Capital liquidation. One of the most well-known hedge funds specializing in Bitcoin investments is Three Arrows Capital. Zhu Xu and Kyle Davies founded the company, also known as 3AC, 10 years ago, and it is well known for its heavily leveraged speculative predictions on the cryptocurrency market. A stablecoin is a sort of cryptocurrency that helps to promote the exchange of other cryptocurrencies and tries to retain value related to external assets like the US dollar. You must be wondering why we're explaining about stablecoin to you. So the reason is that the fall of the crypto bank Celsius earlier in the month of June, as well as the collapse of the algorithmic stablecoin Terra in May, were the only latest in a long line of financial catastrophes brought on by the crypto collapse. A number of troubling cryptocurrency projects, including Terra, Axie Infinity, a play-to-earn game that lost nearly $800 million to a North Korean hack last year, and BlockFi, a centralized cryptocurrency exchange that fired hundreds of employees in mid-June, had Three Arrows Capital heavily invested. There have been speculations that 3AC, which formerly managed more than $15 billion in assets, is solvent ever since the fall of Celsius signaled the start of the second wave of the cryptocurrency crash. Voyager Bitcoin disclosed this week that it owed the hedge fund $650 million, nearly more than 4 times its cash on hand. A multi-million-dollar loan from the creator of the cryptocurrency exchange FTX was obtained by the bank in addition to having to halt customer withdrawals. According to a person familiar with the situation, the US-based cryptocurrency lenders BlockFi and Genesis liquidated some of 3AC's positions last month, according to an article in the Financial Times. Despite borrowing money from BlockFi, 3AC was unable to satisfy the margin call. When an investor receives a margin call, they are required to contribute extra money in order to prevent losses on a deal they made using borrowed funds. Then 3AC fell behind on a Voyager digital loan totaling more than $600 million. Stephen Erdlich, the chief executive officer of Voyager, said that in order to continue meeting the liquidity needs of the customers, the venture is actively seeking ways to improve the balance sheet. Well, all we can do is for the best. Moving ahead to the next reason is number 3, macroeconomic pressure. In order to combat the nation's rising inflation, the U.S. Federal Reserve, perhaps the most significant central bank in the world, is anticipated to raise interest rates many times throughout the year. Interest rates have become much more alluring to investors as a result of the hostile approach of the U.S. Fed and the negative macroeconomic indicators brought on by the rising COVID-19 wave. As has been already mentioned, the U.S. Federal Reserve vigorously raised interest rates twice during the quarter to combat the inflationary crisis. This has led to recession fears in the United States and other nations. Therefore, riskier investments like cryptocurrencies and growth-oriented and tech-related stocks have consequently experienced a severe sell-off. The price changes of U.S. stock indexes and Bitcoin have a strong relationship. As investors liquidate riskier assets, the stock market decline has had a negative impact on Bitcoin and the cryptocurrency market. Number 4, increased threat of regulation. It will not be wrong to say now that 2022 has not been so good for crypto. Since the beginning of the year itself, crypto fell and again rose in February. Because of this roller coaster, the global crypto market has been kept under strong scrutiny of the world governments. The outright prohibition of digital tokens in nations like China continues to be a danger to cryptocurrencies around the world. Reports suggest that India is waiting to see what other countries like the US will soon introduce in terms of cryptocurrency and DeFi regulatory frameworks, despite the fact that the country did not table the crypto bill to outlaw all private virtual currencies during the recently concluded winter session of the parliament. Technological analysis proves that the decline may only be a minor blip in the year's overall cryptocurrency trip, even though most cryptocurrencies are still holding above their minimal support levels. Number 5, Terra USD collapse. With the Terra mishap, everything began. It was an incident with serious repercussions for both its investors and the overall cryptocurrency ecosystem. A stablecoin is a kind of cryptocurrency that is typically correlated to a physical asset. The UST, also known as Terra USD, was intended to be tied one-to-one to the US dollar. Some stablecoins have real-world assets such as fiat money or government bonds as their backers. A stablecoin called Terra Coin, which had a market capitalization of more than $18 billion before the crisis, caused many investors to lose all of their life savings. The sister cryptocurrency of the continuous stablecoin Terra USD, Luna, plummeted to $0. The future viability of comparable crypto assets have been called into question following the collapse of the algorithmic stablecoin Terra USD. For cryptocurrency firms, what worse could have happened than countries like the USA, China, and India are thinking of introducing laws regarding crypto? According to the politico-economic experts, cryptocurrency needs to be regulated owing to concerns like cybercrimes, market manipulation, frauds, and other negative practices for consumers and businesses. Despite numerous Senate investigations on the subject, the United States has not yet approved a framework for regulating cryptocurrencies. In a study released in November 2021, President Joe Biden's review panel on financial markets urged congressional leaders to create a legal framework for stablecoins and mandate that stablecoin issuers be issued financial institutions to safeguard stablecoin investors and users. What caused the most recent crash was a decline in investor faith in the Terra USD stablecoin. Pat Toomey, a Republican from Pennsylvania who serves as the ranking member of the U.S. Senate Banking Committee, put forth legislation in April to create a new regulatory framework for stablecoins. Now, if we talk about how rapidly countries are focusing on internalizing the crypto laws and regulations, then we would say that other nations are moving quickly to regulate cryptocurrencies, while U.S. regulation is progressing comparatively slow. For instance, South Korea started regulating cryptocurrencies, which has allegedly reduced the amount of coins available from 60 to 5. Because there are so many faulty cryptocurrencies available in the US, the legislation lowered less established, less serious cryptocurrency suppliers, which is a problem. Well, this is not professional financial advice. In fact, it is totally based upon our research and experience that we have on this subject. Now, what would you as an investor have to do is to be diligent and aware about such circumstances that could take place at any time. Since the cryptocurrency is still unregulated in many parts of the world, leading to unprecedented patterns of hitting highs and lows in terms of its value. Even though if you are new to the world of crypto investment, these tips will help you do it like a pro. Well, any cryptocurrency's price could theoretically drop to zero, as was the case with Terra price drop, but for something as well known and valued as Bitcoin, significant changes would have to occur in order to permit such a drastic decline in value. By now, you must have got an idea about how and why the crypto is crashing, and we have to make sure that you get an in-depth information for such toppling of crypto. If you found this video useful, or if you want to help someone with the information like this, then share this video with them. And if this video has provided you with the information that you're looking for, then don't forget to hit the like and subscribe button.